What's going on? How we doing? Welcome, everyone. I see everyone already putting in where they're from. California, we're going to talk taxes. I know you need it. Tammy, welcome. Got Puerto Rico, Texas, worldwide. Like Pitbull in here with everyone coming in. How is everyone? Happy Thursday. If you're watching the recording, I'm excited about this. My goal, hey, just a heads up. My mom was a real estate agent. My dad owned a real estate brokerage. My wife is a real estate agent. And if any of you are like my mother, taxes are not your favorite topic. And I'm excited to give you some strategies and give you some ways to keep yourself organized, maximize on your taxes. It's not what you make, it's what you keep. And whether you have great years, average years, below average years, how to make sure you have proper entity structuring, maximize on your taxes through unique tax strategies, building business credit and corporate funding for those of you that are also investors or plan on being investors, and also estate planning as well, trust, wills, living wills. So we'll give a couple minutes here to just let people start cruising in, and then we're going to jump right in. I'm interested, if you don't mind in the chat, I appreciate everyone tell me where they're from. This is great. Aloha from Oahu. That sounds lovely right about now. Lubbock, Texas. I've got a good buddy that lives there. He graduated. Texas Tech is in Lubbock, right? I think he got his doctorate there at Texas Tech if it's in Lubbock. I'm curious if you would throw in the chat for me here. What made you want to be here today? I want to bring you the most value. That's my whole goal. So is it tax strategies? Is it making sure entities are set up properly? Is it protecting legacy in the form of estate planning, business credit? If you don't mind, let me know in the chat. I'm curious on what you want to take out of this presentation. I do have a slide deck to keep me on track. We also have some major tax code changes with the one big beautiful bill that I'm sure all of you have heard about. What I will tell you is, I don't care if you're Republican, you're Democrat, whatever you identify with, the more that we can speak entrepreneur and be aware of the tax code changes and how you can implement them directly back into your business to keep more money into your corner. That's the whole goal. That's the whole goal here. Tax code changes. Yeah, there's plenty of them for sure. I'll make sure to cover some of those for you today. LLC, yes or no, entity structure, tax strategies. You guys are the best. Thank you for this. This is awesome. All the above. I love it. I want to be rich. I like that even more. One of your biggest expenses is taxes. So to get you there, let's make sure you're keeping more of what you're working hard for. One time I was talking about all these tax strategies. I had someone in the chat. They said, Tommy, you're greedy. Just pay your fair share in taxes. I was like, whoa, that caught me off guard. I'd rather entrepreneurs have the money. I still have holes in my roads. So let's reinvest into the future, make it a whole lot easier to grow, scale, and help more people. That's the whole goal here. So, all right. We're going to jump in. Welcome, everyone. Thank you so much for being here. I'm going to share my screen just so that I can give everyone some visuals as we go through here as well. Prime Corporate Services, a little bit of background. We've been in business since 2012, and I'll talk about a lot of how we help business owners as we go throughout these slides. A little bit of background on myself. I have been self-employed. So when I was, my mom was a real estate agent, like I said, and my dad owned a real estate brokerage. And I kind of joke, they got divorced when I was 3 years old. And I partially joke about this, that the one thing they had in common is they wanted my sister and I to be self-employed. And for that, forever grateful. So the major difference when you become self-employed, you have the JOB, just over broke. I think they say that stands for JOB, whatever it is. So you have you go generate You exchange your time for money. They take taxes out of your check, and then they give you what's left over to pay your bills, to invest, and whatever else. Being self-employed is beautiful. You go generate your own income, you reinvest back into yourself and back into your business, and then you pay taxes on what's left. And a lot of you may feel like having a tax conversation is more appropriate in February, March, April. But for those of you that already have a lot of tax strategies in place, you know that the more proactive you can be as opposed to reactive filings, the easier it is to keep more money in your corner. Okay. I love talking to real estate anything. I am very passionate about it. I currently own 78 doors of real estate myself. And the main reason that my wife is a real estate agent and the main reason that we own real estate together is to utilize the tax code. So I think that if you can be a user and understand entity structure and tax strategies, you're also opening the doors to being able to help a lot more investors, entrepreneurs, and being able to speak the language of, here's what I have done to be able to minimize my tax burden and create cash flow through investment properties or whatever else. Yeah, you know that when you can walk the walk and talk the talk, it makes it a lot easier to be able to relate with a lot more buyers, sellers, investors. And that's what I want to do, is give you a little bit of framework here today on how you're able to do it. So plan, profit, and protect your business. It is not what you make, it's what you keep. For today's key points, who is Prime Corporate Services? What in the world do we do? And if we can help you or not. Number two, different types of business entities. We've got LLCs, S-Corp, C-Corps, partnerships. Some states like for real estate professionals like yourself to have professional corporations or professional LLCs. Every state is a little bit different. We'll talk some about that from an entity standpoint. Tax deductions and how they work. If anyone has seen Schitt's Creek on Netflix, it's a pretty funny show. My wife and I watched it. It's pretty good. But one of the parts in Schitt's Creek, the guy David goes, "Don't worry about it. It's a tax deduction," right? And some of you have probably done that, or you've heard someone that, forget it. It's a business expense. Swipe that card. And the response was, that's not how it works. So let's talk about how to identify when an expense is or is not deductible, some of the best practices on how you can track and organize your expenses, and what to be aware of so that you're tracking and giving yourself a really good idea. What I want all of you to feel like is I want to motivate you to have profit and loss in order so that going into the fourth quarter, it feels like a business shopping spree. More marketing, computers, cameras, lighting, ads, purchasing an investment property. When you know your profit and your loss, it makes it so much easier to make educated decisions on what you want to do with your money that truly aligns with your goals, right? You can only buy so many Range Rovers and so many G-Wagons, and I know that's a lot of the craze. We can talk about some of that as well, but aligning your dollars spent with short-term and long-term is absolutely critical, okay? Feel free to keep these questions coming in the chat. I will leave some time towards the end as well to answer some Q&A, but I'll try and make sure that I answer some questions as I go for you as well. Asset protection and generational wealth. It is not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond. So if you can have the blueprint on if you're an agent, broker, you plan on opening up a coffee shop or having investment properties into the future, understanding how the entity structure will look is some of what I will cover for you as well. Personal credit versus business credit. and how you can build a separate credit profile for your business that allows you to use business credit, let the business pay for itself, and then pay yourself from there. Right? I've never met an entrepreneur that says, I wish I had less money. That's yet to happen. So the more funding opportunities that you can create for yourself, the easier it is to once again grow, scale, and help more people, right? Everyone has problems. And a lot of times those problems are a whole lot easier to resolve with more money or good credit. Not always, but a lot of times. So if you can make sure you have good personal credit, a lot of personal problems are much easier. If you can have great business credit as well, a lot of times those business problems become part of the solution, okay? And then last but not least, I do want to talk to all of you a little bit as well. We have a really cool affiliate program so that if you have clients that need help with taxes, or if you know other agents that want to want help with entity structuring, and based off the state that they're located in, how they need to be structured to optimize their situation, I want to give all of you the opportunity to also become affiliates so that if you refer people to us for business, we make sure to pay you for that as a thank you. All righty. Prime Corporate Services has been in business, like I mentioned, since 2012. And when we first started, there was 4 of us, and we really were just treating it as an opportunity to be able to operate as a sales company that would farm out tax plans and legal services to accountants and attorneys. If any of you have experienced this, you take a complicated entrepreneurial question and you go ask an attorney and they say, well, it depends. And then it leans towards oftentimes asset protection. You go ask the same question to the accountant or the CPA, and a lot of times the answer is, it depends, and leans towards the path of least resistance to file your tax return. What I have found is the truth is oftentimes somewhere in the middle for you as an entrepreneur, right? So if you can understand how to ask those questions educated, and make sure that you do have the asset protection, but you're maximizing tax strategy wise, I want to give you some framework there as well. But we've set up over 170,000 businesses. We have filed over 100,000 returns. We file over 50,000 returns a year. We set up thousands of estate plans a year. We're currently getting over $4 million a month in business credit and corporate funding for our clients. And then last but not least, probably the most important piece, we've got a team of amazing professionals, over 400 employees now, A+ with the BBB, 4.9 on Google, Trustpilot. That stuff goes a long way in this day and age as well, as we know. So with that being said, one thing I just want to say from a legal disclaimer standpoint, I do have a full team of CPAs and attorneys. They do all the work. I'm coming and talking to you today as an investor and as an entrepreneur. Okay, I own 8 different businesses, 78 doors of real estate, as I mentioned earlier, a couple office buildings. And I want to talk to you about my experience and a lot of the mistakes that I have made in getting to this point. Being self-employed since I was 18 years old sounds super sexy, but it isn't. When I say that, when I was 18 years old, I drove to Raleigh, North Carolina from Salt Lake City, Utah, where I'm based, and I knocked door to door selling pest control. That was the start of my self-employed journey. So I could make that sound a whole lot cooler than it is, but I got to be honest with all of you. There's the truth. So the 4 core services that we offer as a company are entity formation, business credit development, tax prep, tax filing, bookkeeping, and estate planning. The main goal for not only you as a potential client, hopefully if we can earn the value and trust and become a value to your business, but also for those of you that do want to be an affiliate, we know that you are putting your name on the line by trusting us to help either your clients, your friends, your family, your acquaintances. And we really believe on not just setting someone up and sending them on their way. These are oftentimes very complicated topics that need a little bit of additional hand-holding. And if we can make sure that they understand how they're set up currently as opposed to what they're going to be doing in the future, that's what we want to be able to make sure of, okay? Didn't know it was going to be a sales pitch. If you want to work with us, great. I'm going to get into tax strategies and things that you can implement into your business. Whether or not you work with us, Louise, totally up to you. Don't care about that. So entity structure. All of you are self-employed, right? That's why you're here. And getting into how you can make sure you're set up properly and how you can maximize on your taxes. Your entity structure is really the foundation of how you're going to grow and how you're going to scale your business into the future. Okay? A lot of times, agents, brokers, people that are self-employed in general will simply operate under their name and their social security number. Can you do that? Of course. A lot of you are probably already doing that. But the reason I don't recommend it is because there's no asset protection and there's very limited tax benefits. So depending on the state that you are located in, just to use this as an example, Arizona, for instance, oftentimes likes PLLCs or professional corporations, where other states like Florida are not overly excited about a PLLC or a professional limited company. So write this down if you're taking notes, please. There are 3 things that I always like to tell people to take into consideration on the entities that you already have or the entity structure that you potentially need moving forward. Number 1 is privacy and protection. How much privacy do you want? How much protection do you need? Okay, from a privacy standpoint, a lot of you are the brand. You're putting yourself out there on social media. The more contact that you have, the more clients that you work with, the better for a lot of you. But as an agent, in comparison to an investor, as an investor, you may not want your name and your address listed on public information. So maybe you utilize a registered agent as opposed to using your address. How much privacy do you want and how much protection do you need? The protection aspect will change as your net worth builds, obviously, and how many properties and how many businesses, but making sure you're aware of that, I think, is critical. Number 2, tax benefits, profit or loss. Andrew, this is where it's going to tie into your S-Corp question. I appreciate you asking it. I'm going to get to you here shortly. Tax benefits, profit or loss. Good or bad, profit or loss, how do you put yourself in the best position possible? Okay, I'll talk more about that with the entities. Number 3 is credibility. Show yourself as a legitimate business, not only to your clientele, but also to banks and lenders, right? Banks are businesses. So the more that they know that you are a legitimate business, the easier it is to get larger funding amounts and lower interest rates. All of my business lines of credit are much larger than my personal lines of credit. The interest rates are oftentimes much lower as well. Why? Because statistically, people that are self-employed make more than W-2 earners. It also costs a whole lot more money to run my business than it does my life. So if you can have those separate credit profiles, it does make it a lot easier to be able to build and grow and develop larger credit lines into the future. LLCs are beautiful. PLLCs are awesome because they're simple, they're easy, they are very inexpensive. You can be the solo owner, you can have multi-members, but for a lot of you, it is going to tie back to your professional number in being an agent or a broker. So having an LLC is great. And then as you start to generate income, we need to make sure we're identifying the type of income that is being generated. When you go sell a property, it is active income, wholesaling, fix and flips, real estate transactions. Active income is taxed at the highest rate, 10 to 37% on the federal level. Okay, that doesn't even include the state taxes. So if you're in California, Massachusetts, New York, you're going to have additional state tax on top of that, which obviously all of you know based off the state that you're in. Once you are generating $20,000 to $50,000 net after expenses, $20,000 to $50,000 or more, it is worth it to talk to your tax professional or talk to our team or talk to somebody on if it benefits you to have the PLLC or the LLC taxed as an S corporation. Okay, Andrew asked this question. I love it. S corporations are awesome. They are also simple, easy. They're very, very similar to LLCs in the sense that they work as flow-through entities. So if you have W-2 income and you have an LLC or an S-Corp, they'll still flow through to one overall return. But the major benefit of an S-Corp or having that S-Corp election is to be able to pay yourself a salary or a distribution. It is also to be able to avoid half of your self-employment tax, which is Medicare and Social Security. Okay, ends up saving you about 7% on the overall business income. So huge benefit and huge value there. Now, the most recent tax code change, or the one big beautiful bill act that was just passed on the 4th of July, one of the major components that was put in place is increasing the qualified business income deduction. The QBI is what you've probably heard it referenced as if you have. And what that rule says is that for pass-through entities, like LLCs and S-Corps, like I talked about, in the last couple years, it was 20%. It has now moved to 23%, offering ultimately significant long-term tax relief for small business owners. So 23% of your overall income that you don't have to take those deductions against is a massive benefit. Okay, so make sure having that entity in place is the foundation to not only having asset protection, maximizing on your tax strategies, but giving yourself that credibility as well. Now, some of you may want or may be interested in some point at a C corporation or a full-blown corporation. And if that's the case, it is completely separate, great asset protection, but we have to be very clear on how you're paying yourselves out, the money that's going in, how those deductions are being utilized. Those are all things that if you need help, once again, talk to your professional, or we will give you an opportunity to talk to the team as well. Okay. Now, once you have that business entity in place, if there is one takeaway that you have from this call, it is please, please, please track your expenses. And going back to, if any of you are like my mom that was a real estate agent for 30 years, this is the last thing that you want to do. How do you know if something, when you spend $1, how do you know if it is a business-related expense? Okay. There are 4 words that the IRS really likes: ordinary, necessary, helpful, and appropriate. Okay. Ordinary, necessary, helpful, and appropriate. When you spend $1, if it's ordinary, necessary, helpful, and appropriate for you to generate income, then it is very likely a tax-deductible expense. So I don't care if you're using an Excel spreadsheet, QuickBooks, one designated credit card that you put all of your business-related expenses on. Maybe you're to the point where it makes sense to just hire a bookkeeper. But the reason I recommend that all of you track and organize your expenses is last year, the 50,000 tax forms that we filed, I collected a ton of data points from our team of accountants. And the number one reason why our clients saved an average of $9,200 more than they did their previous year was simply tracking your expenses. Okay, you don't remember what you had for lunch last Tuesday. You're not going to remember if it was business related a month from now. So please track those expenses. Another huge benefit is if you break your year up into calendar quarters at the very least. January, February, March, quarter one, what's your profit and loss? Okay, April, May, June, quarter two, so on and so forth. Going into the fourth quarter, October, November, December, it is the most important time, in my opinion, to know that profit and loss. Okay, a lot of years, the most real estate transactions are in November, December. The 78 doors that I own, 62 were purchased in November or December. Why? Because when I know my profit and loss, I know how much money I can invest into real estate to run cost segregation studies to accelerate the depreciation to create cash flow into the future and keep those dollars in my corner to set up the family for the long term and create more passive income. It doesn't have to be real estate, though. It could be any of these expenses. Marketing, gifts for your clients. What can you do to be able to better your financial future, right? My accountant had me set up an LLC and an S-Corp. Am I misunderstanding, or is only one or the other needed? Usually, if it's just for the real estate business or just for you as an agent, one is sufficient. But if you have multiple streams of income, Rachel, I like that they didn't have you put all of your eggs in one basket and run two different businesses in one entity. So if it's just for one business, I don't know that that would have been necessary, but I might be missing something. And if you do have multiple businesses, I could see why they would do that as well. Okay. Any tips or apps that you can help us with to track these expenses? I love this. Some people just absolutely despise QuickBooks. QuickBooks is kind of like the universal form of accounting. I like QuickBooks. I'm not opposed to it. There is another great app, though. This is the one that someone like my mother would prefer. Stephanie, if you like this, Mile IQ is great to track your mileage. And then there's another one called Keeper Tax that I like quite a bit. I'll put the name in the chat. Keeper Tax is another one that I like quite a bit. What I like about this one and QuickBooks has the same functions now, but Keeper's a little bit less expensive. I think it's like $100, $150 for the whole year, where QuickBooks you could pay $20 to $100 a month. But remember, those are also tax deductible expenses. What I like about Keeper, Hurdler's a good one as well. I have no problem with that. QuickBooks specifically, you can link all of your accounts directly to the platform. So all of my bookkeepers go into my QuickBooks and they break down all of my different accounts and they mark what the expenses are for. So I can connect my Chase credit card, my Discover, my American Express, my checking account, my savings account. And as those expenses come in, they're all in one area where you can identify the type of expense and it tracks it and organizes it for you directly there. What I like about Keeper Tax is that if you have, it'll text you, it'll say, Rachel, you had 15 transactions today. Which one of these are business related? And you just text back 1, 5, 7, 9, and it tracks it directly in the app for you. So it's in a text system. I like that function of Keeper, especially talking to a bunch of real estate people. I know you all live on that phone. So I think that would be a great one. Hurdler is also awesome. Okay. Now, it truly is more money, more problems. The more money, but they're great problems to have, right? So we open them with open arms here. The more money that you make, the more difficult it becomes to last minute plan on how to tax organize. Wave is also a good one. Good call. So on a quarterly basis, the more that you should understand your profit and your loss, the easier it is to make these decisions. Are you saying last quarter, you should be upping your deductible expenses if the income aligns with it? The catch-22 of being self-employed is if you take a ton of deductions, it is harder to qualify for things like homes and vehicles. So a lot of times being self-employed, last year I bought myself a new primary home. So the 2 years prior, I paid more in taxes than I probably wanted to, knowing that I wanted to qualify for more. But if I don't plan on buying a primary home over the next 5 years, I'm going to put more money into different areas like new vehicles, oil and gas, real estate investments that align with what it is that I want to do in the future. I want to keep the tax liability as low as possible, but I also want to be educated with what I want to do into the future with my short-term and my long-term goals. Okay. Keeper can backtrack. All of them can backtrack. Yeah. Now, here's a couple tax strategies that may or may not be applicable to you, but I want to share a couple higher level strategies with you just to get your wheels turning on what's possible. Those of you that are employed and have an employer that pays for your insurance, ask if you qualify for an HSA. Those of you that are paying for your own insurance, ask if you qualify for an HSA. If it's a low deductible plan, Medicare, Medicaid, you won't qualify. So please make sure that you do. But if you do, a lot of you probably have high deductible plans, and having a health savings account is an amazing tax benefit. It is also one of the only triple tax advantages that I am aware of. If you're single, you can put up to $4,300 into this account. If you're married, you can put up to $8,550. So I'll use myself as the example. Don't go over, by the way, there's penalties. So using myself as the example, this year, I will put $8,500 into my HSA. That is a tax deductible expense against my business. I get an $8,500 deduction. Now, depending on the HSA that you have, I have an HSA account that I can invest those dollars. So now they can grow tax-free. If I want to pull the dollars out for a business investment or a medical related expense, co-pays, medications, whatever it may be, there is no tax penalty on pulling those dollars out. So if you qualify, write it down, check if you qualify for an HSA with your insurance. It's an amazing thing to be able to utilize as a tax code. Tell me in the chat, how many kids do you have? I did this one time. The record on me asking how many kids someone has is 13. How many kids do you have? I want to know in the chat. 5. Peter's in the lead. Peter's in the lead. 2, 1, 4, 2. Nice. All right. So I'm going to use myself as the example here again, just because it's easy and we'll keep cruising. So I have time for questions. I've got 2 little girls. I've got a 4-year-old and a 1-year-old. Okay. A lot of times, those of you that have kids, if you were growing up, I can't tell you how many signs, how many open house signs I put up for my mom. Pull up to get out, go put the sign up. What can you do to have your kids assist you with your business? Social media management, video editing, cleaning. What can they do? Envelopes, mailers. Both of my girls are models. They're beautiful. They look like their mother. Lucky for them. They look like me. They probably wouldn't be models. But what I do is I pay my girls for modeling services. My business gets the deduction. They didn't make enough to file a tax return. Part of this one big, beautiful bill, by the way, this actually increased a little bit over 15. I think it's 15,750 now, but don't quote me on that. I got to double check. I should have changed this. So what I love about this is I get the deduction. It's about a $30,000 deduction for my business, but I also get the ability to teach my girls financial literacy. I can invest those dollars into IRAs or life insurance. It should be $1 million in those accounts by the time they're 25. A lot of our clients also will get their kids a debit card and say, hey, you have money, sports, extracurriculars, toys, whatever else, but once it's gone, it's gone. So $15K per child. Can you hire stepchildren? They do need to be dependents in order to utilize this. So if they're dependents, this is a possibility. Grandkids can be on payroll, but it doesn't work as well. They need to be under 17 and a half. So once again, depending on your situation, there's a lot of things you can do, whether they're siblings, grandkids, a lot of things that we want to be able to make sure. Can you also do this with S-Corp without running it through payroll? There's a couple ways. It is possible to be able to do that. But once again, make sure you're running that by your accountant to make sure they're okay with it. So my accountant has been okay with that historically, but a lot of accountants will say, no, it's got to run through payroll. So you got to be on the same page with whoever is filing those taxes. Okay. The Augusta rule, one of my favorites. This is such an awesome tax strategy. If there's any golf fans out there, you know the Masters Golf Tournament is in Augusta, Georgia every year. And back in the 1970s, a gentleman got audited for renting his house out when the Masters Golf Tournament would come into town. It's not what you know, it's who you know. He got this passed all the way through Congress and Senate. It is Section 280A of the tax code. And ultimately what this says is that you can rent your house out up to 14 days a year tax-free. Okay? So what does that mean? How can you utilize that? All of you meet with clients. So what if instead of, if you were to tell me that once a month you went to the Marriott next to your house and you rented out a conference room and you went over your minutes, your meetings, your bookkeeping, your monthly goals, your quarterly goals, your annual goals, your marketing strategies, all of us would probably agree that that is a business-related expense. What if instead of once a month going to the Marriott, we put together a rental agreement? I feel like such a moron every time. Tommy's business rents out Tommy's house for agreed upon amount based off of the area. And then I transfer the money from the business account to the personal account as opposed to the Marriott. A lot of our clients that we help implement this strategy alone is a $10,000 to $20,000 savings from a tax standpoint. So if you're having a party to celebrate your clients, if you're having clients over to the house, if it's strategy, if it's organization, write this one down, look into this one. It's an amazing tax strategy. And it's one more way on how you can keep more money in your corner by just repurposing some of these meetings and minutes and dollars that are going to be spent anyways. As I mentioned earlier, to bring taxes full circle, please track your expenses. $9,200 was the average for 23 on our clients that track their expenses in some capacity as opposed to those that didn't. Asset protection is important. It's a sue happy world that we're living in. I know that all of you have insurance, but I think that this is an important one that as you continue to diversify, real estate agent, real estate investor, coffee shop owner, separate out those different liabilities. And just remember, it's not if you get sued, but when you get sued. I hate that, and it's a depressing comment, but giving yourself asset protection is an obvious benefit due to a rather litigious society that we live in. All right. Personal credit versus business credit. Who in the chat has actually built a business credit profile, Paydex score, established a Dun & Bradstreet number? Who has done that? Because this is an amazing business to build business credit. And a lot of the reasoning is because you guys are constantly on the move. If we think about this fundamentally, you have a legal name, a social security number, and a personal FICO credit score that ranges from 300 to 850. We want to, and we help our clients do the same thing. Let's make sure that you have a legitimate business name. Let's make sure that you have an EIN or an employer identification number. It's like the social for your business. You can also build and develop a Paydex score, which is a separate credit profile for your business. D&B, I have it for a different business. Yes, good. The Paydex score, 1 to 100, 80 to 85 is like you having a 750 to an 800 one more time. So the goal here is to separate the liabilities separate the credit profiles, be able to use business credit and corporate funding as opposed to personal funds or personal credit. Okay, about 3 years ago, I was buying 8 acres and a couple mobile homes out of Missouri. Now, as an investor, I would have been looking at an 8% interest rate, but I had an open business line of credit at 4%. So as opposed to taking out a loan, I used the line of credit and it's 4% as opposed to 8%. Now, I thought I'd be able to refinance it at this point. As all of you know, I haven't. So it's still on that line of credit, but it's still saving me those points and I still get those deductions. Can you do the rent deduction and the office use deduction together? There are ways to do it, but a lot of accountants, once again, don't like it. How I utilize that is my wife takes the home office and I take the Augusta rule, but a lot of that is very situational. Manuel, I assume you asked because your accountant told you no. So there's some clients that we can do it with depending on having a designated office, the amount of use, the deduction. What we don't want to do are raise red flags. We don't want to take deductions that you're not able to take. But fortunately, or unfortunately, however you want to look at it, the tax code's over 70,000 pages. So there's plenty of areas of opportunity that if that strategy doesn't work for you, let's go find another one that does, that aligns with your goals. Okay. But the reason I love business credit is, once again, I have never met an entrepreneur that says, I wish I had less money. The more funding options you have, the easier it is to build and grow and scale your business. We have a lot of agents, a lot of truck drivers that will build up their credit profile and will purchase their vehicles through their business credit as opposed to the personal. Another really cool example that I can share with you on this, we work with a lot of big time real estate investors, one of which we do a lot of work with, had an A&E TV show, the whole 9 yards, plenty of money. But we've helped them build their business credit for 4 or 5 years now. And about 6 months ago, instead of using their own capital, they qualified for an SBA loan. They purchased a 40,000 square foot trampoline park and are able to cash flow $10,000 to $20,000 a month, but still are using OPM, other people's money, credit to be able to facilitate that. So do you have to build business credit? Of course not. The major difference between personal and business credit is that when you turn 18 and get your first credit card, car loan, student loan, they start judging you off that credit history right away. The personal credit, on the other hand, is something that you build, you establish, you maintain. It is not rocket science. It's a process. And this is something that we help thousands of clients with a month. Okay, last but not least, and then I want to make sure I leave some time for questions here, is thinking with the end in mind. It's not about where you are right now, it's where you're going. If you don't have an estate plan, trust, will, living will, power of attorney, it doesn't mean that you need one tomorrow. But all of you need one. So put it on the to-do list, put it on the why wall, put it on the vision board. Maybe it's when you go close your next 5 deals or you make your first 100 grand or whatever that looks like. But please get an estate plan in place at some point. Protect that legacy. Okay, all of you know this better than most. There's a whole industry of people out there going after listings that are strictly on probate. Avoid that situation, protect those assets. Some of you are going to care more about privacy than others. I have a holding company that is based out of Wyoming. Okay, not all states are created equal when it comes to corporate law. Delaware and Wyoming are the best. Nevada's good, Utah, Alaska, New Mexico. But the reason I have that Wyoming company is not because it does any business, because it owns my other businesses. So if someone wants to sue my consulting business, they're not going to see that I'm the owner. They're going to see it's owned by a company that's based out of Wyoming, where my name is not public information. Okay. Now, the comment that was made earlier, I think it was Stephanie, I can't remember exactly though, is, well, I'm an agent, but I also own a coffee shop. Can I just run them through the same entity? You can, but why would you do that? Separate those liabilities. Give yourself a true P&L for each business. Okay, you as an agent is different than you as an investor, not only from a tax standpoint, but a liability standpoint. So separate those liabilities, identify how those entities are taxed, LLC, S-Corp, C-Corp, so that you're maximizing on your deductions, and put yourself in a position where you can really maximize in those areas, okay? Louise, I hate to do this to you. What's the catch, right? Why are we doing this? I hope that this brought a ton of value. I hope that it got you thinking here in July. We're already in the third quarter. Track your expenses, please. Review your entities to make sure they're set up properly. Get the estate planning in place so that you have that asset protection piece. If you need help with anything, we are here to help. The link that I just put in the chat, or you can scan this QR code. You can also go to primepartner.info/EXP. What we have agreed to do is offer to each and every one of you a free one-on-one business consultation. Now, Louise said earlier, I didn't think this was a sales pitch. The consultation is free. The services cost money. Everything is discounted based off of being a part of eXp. I know that you guys roll in herds. There's a million of you. So all the entities are discounted where you have to pay the state, the filing fees, the hard cost, but you don't have to pay for all the additional legal work and the operating agreements that are legally prepared. Everything is significantly discounted. Business credit, I've got an amazing software that we've put together that works like a digital wallet to help you build business credit in a 7-step process and help you understand what loans you would or would not qualify for and why. Real estate loans, retirement loans, trade lines, credit stacking. There's about 15 different ways for you to be able to get credit and 2,000 different vendors on how you can get credit. As mentioned earlier, we do also have a full service accounting firm. Bookkeepers, accountants, monthly taxes, quarterly taxes, annual taxes. We do it all. If you need any help from a tax standpoint, and also estate planning, trust wills, living wills, power of attorneys. But don't schedule this call if you don't think you can get value out of it, right? If you want to schedule the call and you don't feel like we're bringing enough value to do business together, that's fine as well. We really are here to ultimately help and build a long-term relationship. All of you should have entities. All of you probably want more personal and business credit. You have to file the taxes, and estate planning is something that all of you should have at some point if you don't already. So if we're not able to bring value to you, no harm, no foul. My goal is to make sure that we can maximize on what it is that you're already doing. Okay. Last thing that I will mention, and then if you have questions, maybe just throw them in the chat and I can answer those for you. The last thing that I will share with you is when you schedule your call to have the free one-on-one consultation, let my team know if you are interested in being an affiliate. If you want to be able to have your own link to send your clients to us yourself, we will pay you off of services that you send people to us for, or just give them that education like I'm offering to you today. But I don't want you to do that unless you experience it yourself. Okay, just like I told you in the beginning of the call, it's so much easier to walk the walk and talk the talk when you're doing it. If you can understand what that one-on-one experience looks like, if you use us for a service, you're able to say, this is who I use. But if it's something that you're interested in to be an affiliate, I've got some affiliates, we pay 7 figures a year just referring us business. So whether it's a couple $100, 1,000, whatever it may be, this is something that everyone obviously needs to do, is file taxes. And we take a lot of pride in maximizing taxes. Our tax company actually trademarked the term #IRS sucks. And I didn't like it in the beginning, to be honest. I thought it was a bit ridiculous. but a lot of people do like it. Hashtag IRS sucks isn't a matter of there's good that happens from the IRS, but there's no, it's 70,000 pages of a tax code, right? It's crazy. There's so many rules and so many regulations, and every year they change. Just last week, it was one of the largest changes in the one big beautiful bill. 4 or 5 years ago, Tax Cuts and Job Acts was one of the biggest changes all over again. But every year, the last couple years, the changes have been called Inflation Act adjustments. And even on those annual changes, there were 70 to 80 applicable business changes that would likely benefit a lot of you. So if we file your taxes, great. If you're not switching from your person now, no big deal. But have them ask, what are the tax code changes? What strategy should I implement to make sure I'm maximizing on deductions myself? Okay. All right, let's answer a couple questions here. Do you then file a separate return for the business using the EIN number? Great question, Lynn. So when you have an EIN or a separate business entity, LLCs and S-Corps are separate forms. So you have a personal form, you have a business form, they flow through to one overall return. So a lot of times it is a little bit more work for the accountant or the CPA. So if any of your accountants have said, you don't need an LLC or an S-Corp, a lot of times it's for simplicity on the tax return. But when it comes to tax savings, I want to make sure that you have what you need to maximize there. Okay. If I'm a new agent, can I use business credit to get an investment property? Great question. Probably not in the beginning. However, it's possible into the future. Building business credit. Thank you for asking this, by the way. I want to under-promise and over-deliver here from a credit standpoint. Building and developing business credit is a long-term journey. Step number one is showing yourself as bankable with having a professional email, a domain, the type of LLC. Do you or don't you have a professional phone number? Once you have all those pieces in place, step number two is verifying Dun & Bradstreet, Equifax business, and Experian business. Step number three is oftentimes trade lines like gas cards, Staples, Uline, Granger. I buy all my air filters, garbage bags, spring cleaning type stuff, gas card, all of that goes through the business credit so that you can build your credit profile over 3 to 6 months. But to get large lines of credit, it usually will take people a year or two. So the sooner you can build the business credit, even if you haven't generated any income, longevity is a component of your business credit, just like it is your personal credit. Okay. On the personal credit, having an excellent credit profile, one of the components is having over 25 years of an open line of credit. Okay. I'm at 18. When I hit 25, let's have a big old party. We'll run the Augusta rule. We'll rent out my house. You're all invited. We'll have a big old party, catering. We're writing it all off. But I'm more excited for that 25-year mark than I am any birthday I've ever had. I can tell you that. So the longer you can build these credit lines, the easier it is to get larger lines of credit and lower rates. So I hope that, Annette, I hope that helps and answers that question for you. Interested in being an affiliate, schedule the call, click the link. Once again, that call is oriented to have a discovery call. Let us know what you want to learn more about. If you want to do service with us, obviously we'll present that as an offer, but let them know that you want to be an affiliate as well. And we're happy to get you in touch to make that happen, get you your own link, and make sure to get you paid off referrals as well. Okay. Regarding investment properties, would you recommend separate LLCs for each property? We will probably end with this question because it is so amazing. And the fact I didn't answer this before is shame on me. So thank you for asking, Shar. There's no one right answer. How many LLCs should you have per property? This goes back to a lot of times, if you were to ask an attorney this question, a lot of attorneys say different LLC for every property. You ask an accountant, they're like, just keep them all together. there's three things that I think are really important to take into consideration here. How much equity and how much is the property worth? What is your overall risk tolerance? And are you properly insured? So an example would be, I have some clients that do a different LLC for every property. Their risk tolerance is very low. I'm not willing to risk it, not worth it. No, thank you. I have other clients that legitimately have thousands of doors per LLC, but they own tens of thousands of doors. So what makes the most sense for you and why? Right now, I have 12 properties in Missouri that are all under one LLC. If 5 years ago you told me that that would be the case, I would have called you crazy. Okay? I have a 60 unit out of Texas that's under one LLC. I won't put anything else there. I'm going to keep that together. It's one unit, 60 doors, keep that right there. Okay? So depending on the risk, make sure you identify what is best for you and why, based off of value of property, equity in property, insurance, and your overall risk tolerance. Okay? Talk to an attorney, talk to a CPA, make sure you feel comfortable with that one, because there's no one right answer. I'm sorry to give you a terrible answer and just give you more homework, but that's the rude reality there. Partner and I scheduled a call. Awesome. Is a self-directed IRA good for real estate investing? Depends on your situation. Now I sound like my attorney. We have a lot of clients that do a lot of real estate investing through their self-directed IRA. There's excellent tax benefits. You are taking your investment strategies into your own hands. Like anything, there's risk, but there are a lot of benefits in having real estate investments into a self-directed IRA. I've got a lot of friends that have self-directed IRA companies. That's not something that we do here at Prime, but if it's something you're interested in, we could, of course, make those connections to make it easy on you with some of the ones that we've worked with. Right. Video, I believe, is going on YouTube. It should be on YouTube. I believe that is the case. Should we move our primary or secondary residences to LLCs as well? Great question. Primaries, I usually recommend in the trust. Secondaries, trust as well, or entity if it's more of an investment property is usually the recommendation that our attorneys have. And that's what I've done. My primary home is in my trust. All my other homes are either in LLCs, trusts, or some form of entity so that I have asset protection, I maximize tax savings, and it's showing as an actual business. Okay. What's the name of the YouTube video? I don't know. I think it's not what you make, it's what you keep, but I'm not 100%. I'm sorry. I should, Eric, this is embarrassing. All right, it's time for me to go. You guys are just stumping me now. This is good. I hope this is valuable. I really, really do. I hope all of you had at least one takeaway where you're like, that will make me a better business owner. Practice what you preach. Have the entity, track the expenses, be the agent or the broker that gets to say to your clients, this is what I do, and this is how it changed my business, and this is how it changed my life. Be a credit to your profession. I think it goes such a long way. And then you're able to speak the language for the investor clients to maximize there as well. So thank you, everyone. I appreciate you. Thank you for taking the time to be here. And we hope to talk to you soon. Feel free to schedule a call, and we'll see you soon. Have a great rest of the year. Thank you. Thank you.